Ready for adjusting entries, Ange? And read to us, McGowie.
Supplies on hand, 500.
Supplies on hand, 500. So therefore, we're looking for revenue and expense.
An expense.
What kind?
Salary expense.
Salary,
Supplies
supplies expense. And supplies expense increasing or decreasing?
Increase.
It's a verb, it's always increasing. Debit or credit to supply
Debit,
expense?
500.
No.
Oh, wait a minute, credit 500.
No. Well, supply expense. Write down the expense first. On adjusting entries, for you guys, it's easy to, for some reason, when I first learned it was hard too. But it can be a hard part. Supply expense. It's good to remember. We're looking for either revenue or expense, so write them down first. Supply expense is increasing. Why? Because it's a verb. See your expenses?
Yes.
So that debit or credit, all expenses do the same way.
Okay.
So it'll be a debit or credit to supply expense.
Debit.
That's right. Now, it says on hand. Again, a lot of my clients sometimes their English is not their first language. So when they say on hand, it means in their hand is 500.
Whatever is left over?
So that's what's left over. So the account claims to be 2,500. So therefore, the other amount got used. And that's how much the expense is, because expense means to use.
So that'll be the entry would be for 2,000.
That's right. That's right. So she's got a debit supply expense for 2,000. Expense means to use. To use what? To use an asset. The asset that got used was what, Angie? Angie?
I'm trying to understand that. So let's explain 2,000.
Oh, okay. Good. I'm glad you say that. Ange, you see the T account for supplies?
Yes. Yes.
It claims to be 2,500. You see it over there?
Mm-hmm.
But it says that on hand was only 500. So somebody went and counted them. Either you or one of your co-workers counted the supplies, and there was only 500. There wasn't 2,500.
Mm-hmm.
So how much got used, do you think?
500 has 2,000.
That's right. 2,000 got used.
Yes.
And then we...
2,000 is good.
Okay, 2,000 got used. And then the asset that got used was the supplies. So you can make a little box under that. Make it with the under that. Put in the two now. What's the balance now in supplies? McGowie.
500.
All right, so just box it on the left. Box it where it should be boxed. Right, exactly, right there.
What do you mean? Back to what it
In other words, what's the end balance now?
Oh, it's 500 here.
That's right.
You want
So
to-
now usually, try to, so you can see we're on a test or something like that, to make a little space, to work with space. So the supplies is 500. And we're using Brown for adjusting entries, and she posted up to supply expense, and we're ready for the next entry. Where, are you ready though, Ange?
Yes.
You sure?
I'm sure.
Okay, she's sure. Good, we don't want to leave you behind. We're not gonna. So you just stop us if we are, if at any time. Okay?
Okay.
And? Go ahead, McGowie. Read to us.
Accrue salaries payable 500.
Now, when we see the word accrued, when we see the word accrued in an adjusting entry, it means wasn't recorded, wasn't paid. Are we looking for, and then we say to ourselves, am I looking for a revenue or an expense? That's what we say to ourselves. So what are we looking, so are we looking
An
for?
expense.
Okay, what kind of expense you want to call it?
Salary expense.
Okay, salary expense. Then we say, are salary expense increasing or decreasing?
It will decrease 500. I'm sorry, it will increase 500.
That's right, because it's a verb. It's always increasing. Debit or credit to salary expense?
Debit.
Let's do it. Okay, she's going to post up first, which is good. Nothing wrong with that. Okay.
Yes. Here.
All right, that's, okay. Salary expense.
500.
And, or salaries payable?
What does it say? Read it. Oh, yeah. Was accrued, wasn't paid, so salary's payable. That was what happened last period at the beginning of the, remember?
Yes.
the first entry was
Yes.
related to that.
Yes, I understand now.
Good.
Wasn't paid.
That's beautiful. I love how you say that, Angie. That's a beautiful thing to hear you say. And it's nice to be out here on a Saturday, so we're trying to make these films, so please, if we don't, you know, I do need some money in my bank account, so, you know, which a reasonable fee to ask, not these girls, they're at the institution that I work at, they have arrangements with, so they don't, at their school, they have to pass the test, they just can't hang out, go dancing, don't take it studying, still get A's and B's, like certain private colleges here in New Jersey. They have to actually study. Okay? Beautiful. You ready, Miss Angie?
Depreciation.
Read to us.
Depreciation for the month is 100.
100. Is expense increase? So we say to ourselves, this is how we think. Is expense increasing or decreasing? And
1 second. Expenses increase.
it's increasing. It's a verb. It's always increasing. What kind of expense?
It's a debit.
What? No, debit means left. What kind of an expense? Your expenses are debits, though. She's right about that. She is right about that. What kind of expense, though? Let's give it a name.
Depreciation.
Let's call it depreciation expense. Now, McGowie, let's do it. I sure she's going to make a T account. That's cool. You can do either one, which you feel more comfortable with. Later on, we generally will journal post, and then that's how we usually do it. Right now, learning it, the most important thing is to learn it. Just like a language. Depreciation expense is increasing, therefore, as she said, is a debit? Yes, it is. McGowie, true?
Yes.
Okay. Now, expense means use an asset, McGowie. Or Angie,
Why we're decreasing? Why we're decreasing here?
what are we what?
Decreasing. Expense has increased.
Right. Good question. What are we decreasing? That's a good question.
Equipment.
Expense, good. That's the correct answer. What happened, Angie, is that the asset getting used up is equipment. And you see the T account for equipment? It would make sense to put it in the right side of that T account. It would reduce the equipment. But what they do is they don't do it that way. They make another account, a contra account, called accumulated depreciation. Why do they do that? They do that because it gives me more information. For example, I can look right now and see that these people have assets of $13,000, and the assets are pretty new because they're only been depreciated $500. You see that?
Yes.
Whereas if you put it in the T account on the right side, I wouldn't know that then in that case. So the answer to your question is that equipment's getting used up. So we're going to credit what account though, Ange?
Accumulated depreciation.
That's right. Okay, McGowie, do it. That's right. We're going to credit accumulated depreciation. Okay, except you got one little mistake though. You're gonna look at go finish your journal entry. Finish your journal entry. Okay. So now she sees she made a little mistake. And that's what's good about, and we'll be ready for our next and last adjusting entry.